Great. What an incredible set of conversations. And thank you all for being here again, and those online. We've still got a packed room. And really excited to have you all here and to have this conversation. So many of the discussions this morning have been focused on investment, facilitating investment, and how to do so in the context of a complex and changing world. So there are some either in this room or certainly online who may not know what is investment facilitation. Could you level set for us briefly to give us a sense of what you're doing, and then we can dig in a little bit more about how you're doing it.
Sure. Thanks for having me. Chemonics, implements private sector partnerships in all of our work in all sectors: education, democracy, health. But investment facilitation is kind of a subset of our private sector engagement team, where we're kind of implementing projects that are specifically matching investors looking to invest in countries with those companies, businesses, organizations that need that investment. So looking at kind of matchmaking between investors and companies, but then also looking at the broader kind of market system or environment of actors, such as government, kind of SMEs, business development service providers, any of those kind of actors that have a role to play in increasing access to finance.
So certainly that's a multi-layered, complex process unto itself, but you and Chemonics and others are working primarily in fragile environments and fragile contexts. And so when you think about the work that you're doing and facilitating that matchmaking and aligning those investments to needs and demands on the ground, how do you think about that? And what's unique in particular about fragile contexts, understanding, of course, that every country, every community is different?
Yeah. Well, two projects that I'll speak about specifically, one operating in Democratic Republic of Congo, the other in Uganda. So next door neighbors, in some ways both have an incredible amount of potential, particularly in agriculture. And these projects are funded with our partners at USAID and specifically Feed the Future. So looking at agriculture and agricultural enabling environments. And even though there are so many similarities, there's also incredible differences just between those neighbors and in terms of the environment and the way we would establish partnerships or think about partnerships. So, I think first and foremost way the project operates is to evaluate risk, right? Investors care about risk, businesses have risk, and in fragile contexts specifically, some of that risk is real and some of it is perceived. And so our projects are looking at how do we reduce the risks that we can for both businesses and for investors and the businesses they're investing in, and then which risks or shocks will always be present in these fragile contexts, and how can you get ahead of planning for some of them, whether it be climate, whether it be political instability. These projects have developed a set of tools for how we address those or think about those as we're speaking to investors or businesses themselves.
Could you give me an example of kind of each one of those cases? Like, how would you address, for example, risks that are real and they need to be kind of front and center when you're having these discussions regarding facilitating investment? And then also how you manage those that are perceived.
Sure. So as I mentioned, we're working primarily in agriculture, and I think one of the earlier panelists talked about agriculture is notoriously difficult from the perspective of low margins. It's not, I think someone willing to invest in Africa's first thought of where they want to go. However, agriculture is the backbone of these economies. They're incredibly dynamic. Things are always happening. Businesses are finding ways to make money, either in the formal sector or the informal sector. So the opportunities exist. I think the range of opportunities is also incredibly wide, right? So what we are looking at is what are kind of the investments that will best drive a food systems development or evolution and have real impact for the poorest people that USAID and our clients are trying to serve. And so I think, an example in DRC, which I think probably suffers from some of the biggest perception of risk, is it's a country that's trying to diversify its economy away from mining. And we have worked there with a company called Bags and Sacks, which is really a plastics equipment manufacturing. And their traditional clients have been in cement and mining and non-agricultural industries. But what our project has done has shown them that there is a market in agriculture in a different region of the company. For agricultural producers to have bags and packaging materials is incredibly important for their business. Importing them from abroad is very costly and kind of change their business opportunities. And so working with Bags and Sacks, we've demonstrated a very clear business opportunity, kind of gone through that process of investment memorandum, data rooms, kind of the traditional tools of investment facilitation to say, hey, there's a big opportunity here. And so they've closed on a $13 million loan that has essentially allowed them to stand up a factory in a new region of Congo than where they kind of had traditionally operated, because that's where the agricultural market is. On the other hand, we've worked with a company in Uganda called VSU, which is essentially a service provider for small farmers. So they have 50,000 customers. They're all very small farmers, some of whom are in cooperatives, some of whom are kind of in the supply chains of other SMEs, and really kind of showed them the importance of having their own financial systems, tracking of financial data and loans they have received or have applied for, and really kind of shoring up the books, I would say, and kind of navigating the sometimes cultural differences around, you have a set of books for the banker and a set of books for the regulator, and have your ways of operating in informal economies, but trying to help them package their very good business model and to close a much smaller loan than we saw in DRC, but one that I think is equally impactful, and when you're thinking about the impact on the small farmer, their kind of end customer.
So in that respect, there's a bit of capacity building as well, right, in terms of business development and processes as it relates to those businesses on the ground. Is that fair to say?
Yeah, I think it's fair to say, and I think it's capacity building, but it's also helping new entrants arrive into the market. And so I think what that looks like from the enabling environment side of things is, I think we've all heard there's a ton of private capital. We need private capital to solve the challenges of Africa. That is true, but that capital can't always be deployed easily for a lot of reasons, right? Some of it is the investment opportunities, but in the example of DRC, we've been working with the central bank to kind of reform the laws about investment management, what fund managers look like, and how you could even stand up some kind of what we see here in the US as kind of traditional private equity or venture capital vehicles. So working on that enabling environment to bring new sources of capital in, who are very capable once the capital is there of deploying it, and then also working with new businesses, right? And I mentioned informality, but there are plenty of investment seekers who are operating kind of in the informal market, and we are very intentionally kind of providing a range of business development services, right? So that sometimes can be very kind of sophisticated financial tools, and sometimes it can be more basic if you can just make your business operate a little bit more formally, have this basic accounting, it opens up a new set of capital for you than you would have had access to before. So I think it's trying to both facilitate deals, but also broaden the ecosystem of what is possible.
And on the point of broadening the ecosystem, so in Uganda, you've developed a pipeline of about 40 investable companies. Mm-hmm. And so in thinking of those dynamics there, curious how you select them. What are the metrics and the criteria for selecting those companies and building that pipeline?
Yeah, so to get to a pipeline of that size, I mean, we've probably done a quick screen of 600, 700, 800 companies, right? So I think it's kind of taking them through a process, and first and foremost, I mean, the business model matters, right? Like all of this has to make money and be profitable for it to work, right? And then beyond that, I think we look at where there can be particular impact on women, on youth. So a lot of the deals we have worked with have a very clear, with this investment, more women will get jobs or more youth will be customers. So looking at that social inclusion lens, but then also thinking about the broader food system, or kind of which actors have the potential to do more than just make money for their company, but drive the expansion of the sector. And so that's an agricultural specific thing we think about on these two projects in particular.
You've been doing this work for a while, mm-hmm. and across countries. Mm-hmm. And I'm curious what you know now that you didn't know when you began this work, and what are some of those lessons that are informing the work that you do now and the way you approach these new projects and new companies to ensure you're refining the way you do your own business to have greater impact on the ground? Yeah,
I mean, I think there's a constant tension between individual impact, and in this case on one business or one community, and as a previous speaker said, kind of the larger big moonshot, how do we transform the entire finance system of a country, which is hard to do with limited resources. And so I think we have certainly, I think, gotten better at some of those screening tools, the efficiency of moving companies through the pipeline, figuring out which ones need support for a year and which ones after a couple months it's not going to work out, and move on to the next. So I think there has certainly been lessons learned from kind of our own internal screening, private capital deployment toolkit.
Yeah, the comment earlier about failing fast, right? And learning from that, adjusting, adapting, and moving on. We're almost out of time, but I do want to ask, when you're looking forward, what gets you excited? What about the projects that you're working on, the innovations that are happening, and that you're really excited about the impact that you're going to have because of the adaptations and changes that you've made?
Yeah, I mean, I think as I said earlier, the potential is huge, right? Even in these difficult sectors like agriculture, there's just so much that can be done when you bring the right people together. And so I think one thing I'm excited about from the Chemonics perspective is, we very recently launched an impact lab, which works directly with entrepreneurs to scale their solutions. We've started something called Chemonics Capital, which is also kind of facilitating blended finance transactions and other things. And I think, as our company evolves to really helping achieve the sustainable development goals, thinking through that broader set of toolkits we can do to ensure sustainability in a different way than our projects, which are very much looking at the sustainability of the donor funding and their interventions, but how can we, as Chemonics, who's present, globally, really leverage those networks ourselves?
Yeah. As it was very aptly said earlier, this work is hard, but also, as you're describing, exciting as well to see what's changing, the innovation and the ways in which partners are working together to drive impact. So thank you for that. I know you're a very busy man. You're off to Burkina Faso this evening, so thanks for spending some time with us.
Thank you very much.